And in other news, the National Wages Council will convene in 2 weeks to develop the annual guidelines on pay and employment issues. The recommendations are expected by the end of October. The NWC will consider Singapore's economic competitiveness and labour market conditions during its deliberations. It'll also continue issuing guidance on progressive wage growth for lower wage workers. One analyst expects discussions to focus on how recent global uncertainties have affected lower wage workers.
We are a trading economy. Our trade to GDP ratio is over 300%, essentially. So sectors that are consumer-facing, for example, I would say in the retail space, in the accommodation space, F&B space, for example, some parts of manufacturing might be affected. Our petrochemical sectors will definitely be impacted because of the energy and the oil and gas shocks that we are experiencing now.
With retrenchments rising to 4,500 last quarter, another analyst expects the council to consider how displaced workers can transition into fast-growing sectors. He also believes discussions could include helping older workers remain in the workforce longer. That's as sectors such as technology continue to create demand for new skills.
We are seeing an increase in hiring, for example, in data centers, advanced manufacturing, and even AI organization, for example. So these new sectors are creating demand for new skills, creating demand for new jobs. NWC can really help to identify what exactly are the future workforce needs and how exactly they can support talent development.
And for a deeper look into this, we speak to Dr. Faizal Yahya, who is a Senior Research Fellow at the NUS Institute of Policy Studies. Now, Dr. Faizal, lower wage and older workers, they remain a focus here. So what are the biggest gaps when it comes to supporting that now, and who is still falling through the cracks?
Sorry. I think the lower wage workers essentially, some of them actually lack the training opportunities. It's probably due to a lack of awareness on their part in terms of what are the training skills and programs available. It could also be in the fact that for smaller companies, for example, they are unable to release workers given their small manpower numbers, and they are unable to find a cover for their current workers to actually go for training skills. The AI sort of induced displacement essentially is also a concern. I think for lower wage workers, they may not have the AI skills or the digital skills to actually go on to a new job scope. So that means that they have to be retrained essentially. And again, there's the problem of again, as I mentioned, the lack of awareness and the opportunities for them to actually to go for such training. So, and for older workers, essentially, you have to raise the baseline for their AI skills, which is not easy, essentially. So I think these are some of the concerns that actually is happening right now. The government per se, cannot do everything, essentially, right? So perhaps, for in terms of size and capacity, larger corporations, and we have larger corporations in the past that have helped the government to retrain workers. If you look purely at the company level, right, it may be a problem. But if you look at the whole ecosystem, for example, a larger corporation could help the government retrain a lot more workers in a particular skill set, for example. And those reskilled workers that this particular corporation do not need at that point in time could actually go on into the wider ecosystem and wider sector to actually improve and strengthen that particular sector.
And meanwhile, retrenchments have risen to 4,500. That is the highest since late 2020. So training aside, as you mentioned, what needs to change to help displaced workers return not just to work, but also to good jobs?
I think essentially a fairer retrenchment benefits to actually provide them the cushion for them to actually try to port into a new sector. Whether you can actually port relevant skill sets from one sector to another. We have done that in the past. For example, if you recall during COVID, we actually ported a number of our airline cabin crew to the healthcare sector because they have kind of a transferable skills. Looking back further, we have, for example, when we had a downturn in the offshore and marine sector, we had programs, for example, the professional conversion programs, very intensive sort of counseling and career guidance to actually put a number of these highly skilled workers into sectors that are needing those sort of skills. So we have done those in the past, and we can probably draw lessons from those kind of examples that we have gone through before.
And with businesses facing more global uncertainty, how realistic is it then for workers to expect stronger wage growth over the next year? And what would have to happen for that to materialize?
Essentially, the global economy is actually very volatile. We have lots of conflicts. I mean, we have conflicts going on still. We have, for example, but the impact across the economy is not uniform, for example. Sectors, for example, like AI or the semiconductor sectors are doing well because of the AI-driven boom, essentially. Certain specialized engineering services, equipment are also doing well to actually support this the AI boom. Industries, for example, like the chemical industries, as mentioned, are not doing so well because of the external shocks in terms of the oil and gas kind of supplies. Sectors, for example, like retail or hospitality, for example, F&B, may not be doing well. So essentially, it's not uniform. So we would have to look at how to help this particular sector in terms of maybe providing tax incentives or tax cuts, providing extra help for the smaller companies to cash grants, which I think we are doing right now, providing loan channels for these companies to actually stay afloat during these tough times, and actually helping workers. Example, we have things like the flexi-wage policy to try to move workers into areas where their skills are needed, essentially, from areas that are not doing so well. So there are options in terms of this. So I think, for example, the wages, the lower wage workers, essentially, we need to actually raise that particular benchmark. I mean, for example, the lower wage workers compared to the median wage, I mean, also I think it's about half of the median wage, which is not too good because if we compare ourselves to the OECD countries, for example, their lower wage workers are about 2/3 of their median wage income. So essentially, we have a long way to go. And I think essentially, maybe you can put this into legislation to actually get the employers to actually, bring up the wages.
Right. Dr. Faizal, thank you so much for sharing your insights with us. That was Dr. Faizal Yahya from IPS.